Hello everyone, welcome back to the Daily Gold YouTube channel. This video is being recorded on the afternoon of Friday, October 25th, 2024. Thank you so much for tuning in. And in this video, we're going to recap the week as we always do on Friday. I hope you had a great week. For precious metals, an interesting week. Started off red hot, then some selling in the middle of the week. A little bit of a rebound to close out the week. So the way things finished, we had silver up about 1.5% on the week. Gold was up nearly 1% on the week. GDX, because of the Newmont news, their earnings report and the reaction to it, was down almost 4% on the week. But GDXJ, the juniors, down 2% on the week. Silver juniors down 1% on the week. Let's get to the video. So starting off here, I think silver running up to 35 and then coming back. That was the big story of the week. As we have been saying and writing about for days and weeks, 35 is important resistance for silver. So silver ran up to 35 in the middle of the week. Then it came back hard. There was quite a bit of selling there. So this is resistance. But prior to that, we had the breakout from this rough, and I say rough because it's not perfect, a rough continuation inverse head and shoulders pattern. This being the shoulder, this the head, this the other shoulder. And again, last week, the measured upside target for this is actually above 38. It's in the 38s. So what does that mean? Well, we have this big resistance here at 35. We do have support here at 32.5, also down to 32. So we'll see how silver acts. It did fill this gap here. That's good. You like to see that in the short term. Maybe it bounces here for a little while before moving higher, trying to challenge 35 again. But that's where we are. Support right here. Resistance at 35. The target is still in the 38s. Okay, but let's talk about the monthly chart. So it's October 25th. So what does that mean? We have, 3 more days left in the month. And people, we know that, monthly, quarterly, weekly closes, they're all important. But the 35 target, that's not just on the daily or weekly charts. That's on the monthly charts. We can see here, right at 35, you go back to 2011, 2012, beginning of 2013, support here, resistance, resistance, resistance. So this is tough resistance. This isn't something that's just going to happen in a couple days. This could take at least a month or two, possibly even more. And you go back to 1980 and you look at the action there. 36 is resistance in 1980 on the monthly chart. So 35, 36, it's not just short-term resistance. That's big monthly resistance. We'll get into that more at the end of the month, but it's important to keep in mind. If you think this market is going to run away, we're going to have to see a monthly close above 35 before that happens. And maybe we do get that close next week. I'm a little skeptical, but we'll see. Okay, let's talk about gold in the monthly chart because, the daily and weekly chart, we know it's coming up on 3,000. It's a clear target, very strong target. And gold's overbought. This is a monthly chart. And by the way, overbought's a good thing. Initially, when you get overbought in a bull market, that's a good thing. In bull markets, gold and silver especially, they stay overbought. They get really overbought. They can keep going. But once you stay overbought, you keep moving up, and then you get kind of extremely overbought, that can be worrisome that move could be coming to an end. So this is just a simple way of looking at it. Look at the RSI. This is the monthly chart. Now, this is not updating. The RSI is not updated for October yet. So, going into this month, the RSI was nearly 80. Next week, maybe this will show us at 86 or 85. I mean, I'm just guessing. But drawing the line here, we could be up even as overbought as some of these other points. This chart, based on a couple weeks ago, I drew these lines here to kind of show similar readings in gold. And the best comparisons, I think, were these thick lines. So right here in 2005 and right here in 78. That doesn't mean we're exactly at those spots and we're going to repeat the performance, but kind of in a, like a year or two sense, looking at that type of trend, that's how potentially overbought we can be. So basically what I'm saying is there's a lot of evidence stacking up that we could get some kind of correction at 3,000. Maybe it goes sideways for 3 months, or maybe it corrects really hard to 2,500 for a month or two, and that's it. And then it just keeps going up. But my point is, gold, I don't know if this chart is updated. I apologize. This is not updated because we are in the 2,700s. So I apologize for that. But anyway, my point is, we'll talk about this next week. We're going to look at the monthly chart. Gold is getting more overbought. And look, we're coming after that 3,000 target. I've already said it multiple times, but let's just be a little cautious. Short-term trend's still up, but we're getting closer to a correction. Before we get to the stocks, just indulge me for a minute here talking about my service, the Daily Gold Premium. We're looking for the quality juniors that have offer great value and have potential to 5x and 10x in this new bull market over the coming years. And, there's been some down weeks for the miners in recent weeks, but not for our portfolio. I mean, I check it every Friday, update it. It's in every update, and it's still going up. I mean, we had some stocks this week. Even today, during the last 2 days, we had a couple of our top 10 stocks are just shooting higher. So, look, you can make a lot of money buying the sector, but proper stock picking will serve you wonders. That's what we try and do at the Daily Gold Premium. Would love to have you aboard. Now, let's get to the miners and see if I can wrap this thing up in a couple minutes. Okay, so I'm coming back to the GDX and GDXJ monthly charts. Why am I doing that? Well, because this big picture, it lays out perfectly where we could be going in the short term. So GDX here, yes, it has pulled back. This is a monthly candle. It's looking worse because of Newmont. But so it got up here to, 44. Now it's back down $3 in the mid 41s. But, 47, 48 right here. This is clear resistance. I mean, look. You can see. You can look at the chart for yourself. This is a strong resistance target. Now, GDXJ, because of Newmont, I think we should pay more attention to GDXJ as far as how much more upside there is in the short term and that type of thing. So GDXJ closed the week just below 53, 52.87, 60. That's the next strong target. I mean, we can see here going back that's a really important level. So 60, 61, we're at 52.87. So there is more upside for the sector and the stocks. I mean, they're not as overbought as gold, but that's usually the way it works. Gold gets overbought, then the senior miners get overbought, then the silver stocks and juniors, they start leading. So they still have some room to move. Looking at, this is just a short-term chart. So remember SILJ talking about this beautiful complex continuation inverse head and shoulders pattern, which projects up to the 16s. Big pop up here. Now it's coming back. No big deal. Could be retesting support before it moves back up. GDXJ, I still love the action here. Here it popped up, retested the support here a couple weeks ago. Big, strong move higher. Now it's pulling back a little bit. So you have support here and also some support here. Last thing I want to talk about before we close up this video, let's look at GDXJ and some indicators that can help us decipher when the market is too overbought and there's risk of a decline or a correction. So I've talked about this before, the new 52-week highs. So this is my own data, folks. I'm smoothing out the new 52-week highs. It's daily data. This is a 20-day exponential moving average of the new 52-week highs. This is a 50-day exponential moving average. This is where we are here and now, you can see, compared to past peaks. Same thing here with the 50-day. Oh, actually, this should be a little lower. I'm sorry about that. But you can see, we're not as overbought as these peaks here. And this doesn't mean that we have to get to that point for a correction to start. But it gives us a sense of where we are. We're a little overbought. That's a good thing. We can also look at these indicators as well. The distance from the 200-day EMA. So a little overbought, rate of change 50 days, not as overbought. So the overbought where we are here and now, it's a good thing. So it's a better thing that we're correcting now rather than shooting up and having a bigger correction later. So I still see some more upside in the minors and juniors. That's it for this video. Let me know what you think. Leave a comment. Would love to hear from you. Hope you guys have a great weekend. That's all for me. Talk to you guys on Monday. Thanks.